Hey there, everyone. It is January 7th, 2021. Uh, this ongoing vlog has been focused on the coronavirus and the markets. It's interesting how absent coronavirus news is today, um, as we reach what is nearing the peak. Let's hope it's this peak. Most models say it's going to be around 30, nearly 4,000 deaths a day, um, up from where we are now, 3,600 deaths a day nationally in the United States, higher than it's ever been. But it is newsworthy that Trump conceded the election and there was a break-in to the Capitol yesterday, which is still getting a lot of news. Even with that into account, when we come down here, you get into celebrity news before anything corona related. Um, there's this one article here about, well, don't drink too much before you get the vaccine. Um, Yet, if you continue scrolling down, it's either political or celebrity, and um, astonishing how maybe this collective numbness has taken over. And yeah, perhaps it's related to what is anticipated with the vaccine. You come over here on Market Watch. Um, they've got a piece on why to be bullish, um, but still not much coronavirus news. Here we go. A record of almost 4,000 a day, pinned in between the political news. And it's not too different on Seeking Alpha. Um, the the counter to the bullish perspective on Market Watch is this piece here. I guess it's part 3 of What Were You Thinking? And you know, market valuations, they have always tended to have uh, correlation to valuations. And when we see these times where the red here represents the number of stocks, the number of individual stocks that are trading over 10 times sales, meaning their valuation is 10 times their annual sales. And mind you, when you buy a company on the private market, usually pay maybe 1 time sales and 3 times earnings, right? For say a brick and mortar store out there. And here we have the the number of components over a 10 times earnings multiple. You could say, okay, well, we had this anomaly. The economy was shut down during coronavirus, and the retrospective, price earnings, because it takes today's price over last year's revenue. But I've seen some forward-looking price sales ratios, and it's not that encouraging either. Some of them were okay, but by and large, there was reason to consider that these markets might be overvalued. But nothing really about coronavirus or yeah. Let me see what was over here. I think that was interesting. Bonds are riskier than stocks because interest rates are rising. And gosh, here we'll just jump back one. I usually have one or two other sites, but probably see a similar thing where it's very dominated by the capital and the political news. But yeah, before we sign off here, let's at least show you what the markets have done over the past couple days, because yeah, it's been amazing. In fact, I think they reached a high, and this was yesterday, as the break-in was happening, which yeah is putting it lightly, and there are some who very much view this as a coup attempt, albeit a weak and failed one. Right. So, yeah, today is Thursday. Yesterday was the break-in, and markets not affected by it. And yeah, interestingly, even though they gave up a little bit here, it might be considered counterintuitive to those who would see a break-in or a mob storming the Capitol as a signal that the country is not as strong as one would like to believe. But that's not having an appearance here yet. Perhaps the other perspective is that it's getting the bad news that we had always feared or maybe expected, getting the bad news behind us. Yeah, I guess keep an eye out on those forward PEs and price sales ratios, and we'll see if coronavirus still has any effect left on the markets and on analyst perspectives.